Understanding the basics of forensic accounting. Introduction to forensic accounting. Start with a clear definition. Forensic accounting is a specialized field of accounting that involves investigating financial records for discrepancies, fraud, and errors. It's often used in legal disputes, fraud investigations, and financial audits. Explain its importance. Forensic accounting helps businesses identify and address financial discrepancies, ensuring that financial statements are accurate and reliable. It's a critical tool for protecting a company's financial health and reputation. Introduce the day's focus. Today's session will cover the basics of forensic accounting, why it's essential, and what areas you should be aware of to safeguard your business. Why forensic accounting matters. Detects fraud and errors. Forensic accounting plays a critical role in uncovering financial fraud and errors that can threaten your business's financial health and stability. Ensures compliance. It helps ensure that your business adheres to regulations and accounting standards, preventing costly legal issues and regulatory penalties. Protects financial integrity. By maintaining accurate and transparent financial records, forensic accounting builds trust with stakeholders, investors, and clients, key to long-term business success. Common types of financial fraud. The most common types of financial fraud: embezzlement, when an employee or executive misappropriates company funds for personal use. Asset misappropriation, theft or misuse of a company's assets, such as inventory, cash, or equipment. Financial statement fraud, deliberate manipulation of financial statements to present a false picture of a company's financial health. The potential impact on your business should fraud occur include financial losses, damaged reputation, and legal consequences. Key areas to look out for. Identify critical areas where fraud or errors are likely to occur. Unusual transactions, large or frequent transactions that are not typical for the business. Unauthorized payments, payments made without proper approval or documentation. Discrepancies in financial records, differences between recorded amounts and actual balances in bank accounts or physical assets. Encourage vigilance and regular monitoring of these areas to prevent and detect issues early. Case study introduction. A practical scenario. ABC Services, a small consulting firm owned by Mr. Smith, has been steadily growing over the past few years. Recently, while reviewing the company's monthly bank statements, Mr. Smith noticed several unusual transactions that don't align with the company's typical spending patterns. These transactions raise concerns about potential errors or even unauthorized payments, prompting him to investigate. Curious and concerned, Mr. Smith reaches out to his team, hoping to clarify the origin and nature of these transactions. He sets up a meeting with one of his employees, looking to address the issue head-on. Spotting the red flags. An example of a business owner identifying potential red flags. I noticed a large transaction last month that I don't remember approving. Can you explain what it was for?
Oh, that was just a payment for office supplies. I handled it because you were out.
The amount seems higher than usual. Can you show me the receipt and the approval process you followed? Emphasize the importance of questioning unusual transactions and seeking proper documentation. What the owner should do next. The owner, Mr. Smith, should take the following steps after spotting a potential issue: request supporting documentation, verify the transaction with receipts, invoices, and any related approval documents. Compare with past transactions, check if similar transactions have occurred before and if they were handled correctly. Identify patterns, look for recurring issues or inconsistencies that might suggest ongoing problems. Highlight the importance of acting quickly to prevent potential fraud or errors from escalating. Importance of documentation. Here are the reasons why documentation is a critical function in forensic accounting. Accurate record-keeping ensures all transactions are properly recorded and can be traced back if needed. Supporting evidence, documentation serves as proof of transactions and can be crucial in investigations or audits. Accountability helps track who approved or executed transactions, adding a layer of accountability. Encourage businesses to maintain detailed and organized financial records. When to call a professional. If you are unable to explain the difference, perhaps it would be wise to bring in a forensic accountant. Here are the reasons why. Unexplained discrepancies: if issues cannot be easily explained or resolved with internal resources. Suspected fraud: when there are signs of intentional wrongdoing or significant financial losses. Complex investigations: if the business lacks the expertise to conduct a thorough investigation. A forensic accountant will help in resolving complex financial issues. Key takeaways. Here are the key points covered in the presentation. Understanding forensic accounting, its role in identifying fraud and errors. Key areas to monitor: unusual transactions, unauthorized payments, and discrepancies. Importance of documentation: keeping accurate records to support financial integrity. When to seek help: knowing when it's time to call in a forensic accountant. So, as a business owner or manager, it is important to stay vigilant and consider professional forensic accounting services to protect your business. Call to action: contact Peter Adams. Ready to secure your business? If you're concerned about the accuracy of your financial statements or suspect potential fraud, don't wait. Contact Peter Adams for a comprehensive forensic accounting consultation. Together, we can protect your business and ensure financial integrity. Stay informed and connected. If you are concerned about suspicious activities in your business, let's connect. You can book a complimentary 30-minute session at www.numberschef.co.uk. Follow us on social media and subscribe to our newsletter for the latest tips on forensic accounting, fraud prevention, and financial management.